Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. So let's take a look again in the euro currency. In general, things that we discussed in the recent couple of sessions seem to be correct. It's because with this performance 2 days ago, we said that it's not bearish performance. Probably market is showing attempt to reverse. And later we also talked about the patterns that start appearing on the intraday chart, such as reverse hand and shoulders. So today, the trend by the MACD has turned bullish again. And on intraday charts, market has moved slightly higher. So it might be the attempt of the market to keep going in an upward direction. So let's see what we could do today, what particular levels or patterns we could consider. So on the 4 time frame chart, you can see that the upward action has happened relatively fast. Divergence stands in place. So the divergence suggests around the 50% support. It suggests taking out of this top. So at least based on only on the divergence, market should keep going higher somehow and challenge this previous top. This has been formed here locally on the 4 time frame chart. It means that in some way we should get some kind of the upward continuation based on the overall picture that we have. Trend on the 4 time frame chart also stands bullish. Meantime, on the hourly chart, market has shown slightly different performance that we thought. So if you remember, yesterday we talked about these hand shoulders and said, let's see, maybe somewhere around 116.10, 16.20 area, we will get the chance for entry. But here was very small retracement. The market just keep going higher. Now you could see that with this upward action, we've got bullish reversal swing. So this upward action here is more extended than the previous swing down. Since in recent few sessions or even within the week, overall performance here was not quite stable. So you can see lots of different swings in opposite direction, very deep retracements. So some kind of the chaos stands in this range where the market actually is flirting around. From that standpoint of view, here for position taking, I prefer to consider it be deeper retracement. Maybe in some way of the guarded steeple to buy or something. Somewhere to the 1635 area seems will be okay, just because it will be retesting of this trend line. It's very close to it. 50% support of the whole upward direction. And usually after reversal swings, markets trying to show moderate pullbacks, so some retracements. 50% or 618. It's quite normal. I'm not sure that it definitely will happen. Maybe a market will try to keep going higher right from here. It's also possible. But in the current circumstances, if you would take position here, where you will hide your stop order, it's the placement in this point. It's not very comfortable from this standpoint of view. So it's risk-reward ratio where you hide your stop. So. But with the taken position somewhere around with the 50% 618 retracement, you could place relatively tight stop and you will get better entry price. So if we will definitely see that market accelerating higher and moving in upward direction, we will consider different support levels for possible position taking. Maybe market is standing right now to the top. It's also possible. It's based on the current shape, it's difficult to say definitely. In this case, we probably will take a look later on some pullback out from this resistance area and consider entry with a different trading plan. But for now, especially today's Friday, I don't want to risk too much and prefer to keep an eye on some maybe kind of the ABC retracement here, which will be more or less acceptable, and we will have the patterns, so we understand what I'm talking about. That's probably what we have on the euro currency. On Great British Pound, situation stands very similar. So, but here it's a bit, well, maybe more simple to decide on the position taking. It's just because here we have two additional patterns that simplify this. First is a butterfly, as I said. So, and we talked about this yesterday and the day before when we said consider this guarded steeple to buy for position taking. With this butterfly, it's easily to conclude we're in validation point and stands below this lows. This is the first moment. Second moment, market here is obviously forming kind of the triangle consolidation, which is also, well, looks supportive for a possible upward continuation. And here you could try just to, if you would like to take the long position, you probably could wait for some minor pullbacks, and now market already stands in the 30% support of this upward direction. If it will drop slightly lower, you could consider another chance for position taking. Speaking easily, you just watch for this consolidation as an area for accumulation of your position. If you're sure the market will go higher and you would like to take the long position. You have the patterns, you have invalidation points, and you could decide where you would like to take the position, which risk will be acceptable to you. So here it's a bit more simple. On your accounts, the overall price performance is more chaotic, and here is a bit more difficult to decide. And that's actually makes me think to wait for something like this. So that's probably all for now. See you in the weekend.